Hello and welcome everyone to this webinar with Solarplaza. Today we will be speaking about the Dutch power market. So we'll try to give a good overview of what's happening in the Dutch power market landscape and of course some new trends in energy pricing. I would like to first give you a little bit of the agenda of today. My name is Manuela Hartung. I'm project manager at Solarplaza, and I will be doing a short introduction about the company. And we will have a presentation from Felipe van der Kerkhof. He is from Aurora Energy Research, and Felipe will give a presentation divided in a few sections. So we will also allow for some questions during his presentation. And of course, at the end, we'll also have a more extensive Q&A session. So this is what we'll be talking about today. And just to share a little bit about Solarplaza with you, for the ones that don't know us yet. So Solarplaza, our main mission is to share knowledge and network. And of course, it's our business to accelerate the sustainable energy transition. We have been established since 2004, and we are based in Rotterdam, but we have done events in more than 44 countries and over 175 events already worldwide. And we have a connection with 60,000 solar PV professionals that we try to connect through our platform. And of course, we also do newsletters, resources, and plenty of good content such as this webinar. And a little bit about our other branches. We also have the Solarplaza consultancy, which offers integrated solutions for market entry and market penetration. And we also have the Solarplaza Foundation, which aims to share, to accelerate our goal even further for less privileged countries and societies. So a little bit about the reason why we're doing this webinar is not only because we want to share a high-level content, of course, but also because we are leading up to our event in the Netherlands, in Utrecht, which is going to happen on the 21st of June at the Fabriek. And we will gather, of course, a lot of important stakeholders in the Dutch solar landscape, and we will meet all there to share more knowledge and to, of course, provide a lot of good quality networking, and we will discuss many good, interesting topics, hot issues in the market, including this topic that we will be sharing in the webinar today. So if you want to know more about the topic after Philippe's presentation, you should come to our conference, because there you will learn much more and also be able to connect to important stakeholders. All right, a little bit on the practical notes. Just if you have questions for Felipe, please use the questions box in your side panel, in your screen, and we will answer them after the first session of the presentation, but also at the end. So I encourage you to, throughout the presentation of Felipe already, to send your questions, because we will make some time during the presentation to already answer them. If you have any technical issues, please also use the same questions box, and our staff will try to help you as soon as we can. And of course, as always, the presentation slides and the full recordings will be available for you after the webinar. Just expect a few days after today. All right, well, without further ado, I would like to invite Felipe to join the screen. Felipe, if you are over there, you can already join us on the virtual stage. Welcome. I'll do a very short introduction about Felipe. So he's Senior Commercial Associate at Aurora Energy Research. Felipe holds a Master in Economics, and he won a very nice award on the best thesis on the field of network economics. Well, before joining Aurora, he worked at the Dutch Embassy in Berlin and also at a battery startup in the Netherlands. And his area of focus today is, of course, the Dutch power market dynamics, more specific price developments, long-term trends, and of course, developments in the energy policy in the Netherlands, which he will be sharing with us today. Felipe, thank you so much for joining us.
Yeah, great to be here. Thanks.
Thank you. Felipe, before you take it away with your presentation, I think we would like to know a little bit more from the audience that is joining us today. So just to get a feel, we are launching a quick poll for you to answer. So we would like to know, what is your involvement in the Dutch power market? For us to get a little bit of a feel of who you are. So I'm a developer worried about the future of my project, or I'm an investor or a bank or a financier thirsty for new opportunities, or maybe I'm a utility concerned about the future of renewables, or I'm a technical expert just very curious about electricity prices, or all of them or none of them, but in the end, I'm a power market enthusiast. So we have a few minutes to answer this poll. So let's see, who are we talking to, Felipe? Are you curious to know who is our main audience today?
Absolutely, and I'm especially keen to get to know the power market enthusiasts. It's always great. It's a nice group of people with that you usually meet also at the events that you organize, not just in Utrecht in the Fabriek, but also all across Europe. Which, as Aurora, we're always very keen to participate in and meet the power market enthusiasts, meet the technical experts. The utilities concerned is always great. What was the other ones? The banks and the developers. Oh, that's great. There's a
So
lot of
look
power
at
market
that.
enthusiasts.
Wow, we have a lot of power market enthusiasts in the room. That's really good to see. But also a lot of developers worried about the future of their project. So I guess this is a good overview for us to have before you dive into the topic, Felipe. And well, thank you so much for answering the poll. And we will give the floor to Felipe. So thank you, Felipe, and the floor is yours.
Thank you. That's great. I should have control of the presentation. Yeah. Thank you for inviting me to speak about long-term power market trends. Like I already said, every year Solarplaza events manage to bring together a lot of very interesting people. I'm very happy that quite a few of those interesting people are also listening in today. And over the next 53 minutes, together with you, I'll talk you through some of the key trends in the Dutch market, focusing on three main areas. First, what's happening right now? A quick snapshot of the bizarre times that we're currently in, especially when it comes to power prices in our domain. Secondly, walk you through what are some of the key questions that we have identified, and then third, and I'm very happy that there are loads of developers worried about the future of their projects. We'll actually tackle that in section 3 when we'll talk about the main ways to finance new projects. I've also brought some extra content on what happens if the world moves to a net zero system, and we get rid of all of the emissions, which is great, but that also means a lot more solar in the market. Maybe before that, quickly talk about Aurora Energy Research for those that don't know. Aurora Energy Research is a power market modeling company founded in Oxford in more than almost a decade ago. And from there, we analyze long-term power market trends, long-term energy market trends all over the world, primarily focused on Europe, but also in Australia and the US. I'm out of our Berlin office, where we have a team of roughly 80, 90 people that focus on continental European power markets. And the Dutch team that I'm a part of is 5 or 6 from next week on, when we have a new joiner, 6 experts that focus on the day-to-day sort of dealings and reelings in the Dutch power market, policy, modeling, and then long-term power market trends on the wholesale market, on capture prices, on PPAs, etc. My role in that is I am a senior commercial associate, meaning that I have I'm the main business developer of the company on the Dutch market, and sell some of the services that we offer in the market. We mostly do that around 3 main areas. First, our standard reports. We have quarterly updated reports on the trends in the Dutch power market with long-term forecasts. We have commissioned projects, your standard consultancy services that are used when you have a transaction, when you have an acquisition, or if you have questions about our sort of how the market is going. A recent example of that is a study that we did for the Dutch Ministry of Economic Affairs on CO2-free flexibility. And then third and finally, we have software tools that developers, power market enthusiasts, utilities, etc., can use to do their own analyses on the long-term trends in the Dutch or other power markets across Europe. On the Dutch services specifically, I just quickly wanted to address this. If you want to know more about this, and hopefully you will want to know more after this session this morning. Quarterly reports, we do extra networking events as well, and recently we also launched some additional analysis on some of the hot topics in the Dutch market, mostly batteries. So standalone batteries to get the revenue forecasts for those batteries, as well as co-located batteries for your solar or wind, for your renewable asset there. That's enough business talk. Let's talk content. And let's start with key questions in the Dutch power market, because we're in a special period in time, which hopefully becomes clear on the next slide. At the moment, over the past 24 months, what we have seen is two very extreme events. On the one hand, in 2020, with the early lockdowns, we had relatively low power prices. And you can see that here in the 2020 box. And then you also see how extreme the current situation is when it comes to power market prices. So what we see on this graph is the historic baseload prices, day ahead prices from 2015 until Monday night. And it really shows the extreme situation that we have. I made an extra call out box just to sort of show what is happening there with the current high power prices, and really show that it is very correlated to the tightness in the commodity market, especially gas, that is linked to gas markets being used as a political tool in Europe, only strengthened by last week's announcement of Gazprom to stop deliveries to the Netherlands. What we see here is the power prices moving very much in sync with gas prices. And you also see that that has both an upside and a downside. So whenever there is a worry in the market that gas prices are to go up or deliveries are to be stopped, you see the prices jump through the roof. And that really has a reflection on the power prices as well. You also see when markets calm down a little bit that power prices tend to go down and tend to drop to sort of levels that are still significantly higher than they were before, at sort of the 150 euro per megawatt hour for as a daily average, but still not the extremes of the 300 euros that we hit there. Now, why is this important for your solar asset? No, let me get back to why we're talking about this 1 second. These power prices are at both the low side in the Corona lockdown as well as the high side at the moment. They usually have fundamental explanations, and these fundamental explanations can be found in the gas markets, but can also sort of, there is an additional, in these gas markets, additional political uncertainty as to when gas prices will go down. I'll have a question about that right after sort of going through some of the key snapshots in the Dutch market, which on the next slide, we're going to see a overview of what is happening in the Dutch market. First, you see on the right-hand side in the electricity production and the net imports, you see why gas prices are so important for Dutch power prices. You see that, for example, in 2016 or 2019, 2020, more than 40% of power generated in the Dutch market was generated by gas. So as you can imagine, power prices are very strongly correlated with gas prices. A second thing that you will see, and then we move to the left, the graph on the left, is also how quickly the Dutch power market is evolving, is developing. The Netherlands, back in 2015, still very much a lagger on the implementation of renewable energy sources, is really rapidly catching up, especially the solar space, where growth has been extremely impressive. This does come with a downside. As you see in the black line on that graph, you see the average daily demand, sort of between sort of 12.5 gigawatts. This is the average. And you see that on a sunny day, a Saturday in April, a Saturday last week, the supply of solar, the power generation from solar exceeds usually the supply, and that leads to negative prices. The future of the Dutch market, in the way that we see it, we analyze it, depends on some key questions. First, the question on whether renewable growth will continue, especially on the solar space. The question of how much offshore wind will come online. But secondly, even more fundamentally, and that is a diversion from how the system was composed, the energy system was composed in the past. The importance for your business case also really depends on the growth in flexible sources of demand, such as electric vehicles, batteries, electrolysis to generate hydrogen, and also to a lesser extent, how industrial processes can be electrified and can be adapted to switch up or turn down their electricity demand. The Dutch power market at the moment, from where we are now with this short snapshot on power prices, on generation, and on installed capacity, really is at crossroads. And that can be boiled down, sort of looking to the next decade, to 4 main questions. First, climate targets and coal phase out. You might have heard that there is a coal phase out planned in the Netherlands. All of the modern coal fleet is supposed to be phased out by 2030. And at the moment, there's an additional constraint in that there is a CO2 emissions cap on the 3 modern coal plants, meaning that they're only allowed to emit 35% of the CO2 that they would be allowed to emit in a normal year. And that really hinders the current generation in the Dutch market. The question there, is that allowed to continue, especially when gas markets are so tight? One uncertainty. Second uncertainty, people worried about their SDE Plus subsidies, and at the Solarplaza event, we will talk about the post SDE Plus world. But a major question, especially in the solar space, is how are SDE Plus subsidies allowed to continue? Will they be allowed to continue, and to what extent? At the moment, in law, in Dutch writing, it has a 35 terawatt-hour cap for large on-land renewables coming from onshore wind and solar PV. That law recently is likely, has been announced, is likely to change with Minister Rob Jetten with the climate portfolio announcing that even if the last round, in the last SDE Plus subsidy round, solar and wind were to hit that cap, so no further subsidies would be available if you were to follow the law. That has been changed, has been adapted. Solar PV is allowed to participate in the upcoming round, and there is a cap on the amount of subsidies that will be available in the current round and in the round of 2023 in all likeliness. But a major uncertainty on the business case of developers that we hear. Secondly, there's obviously also grid constraints. There's problems in the Netherlands with the build out, especially of larger solar parks, where there's a lot of NIMBYism, not in my backyard. There are grid congestion issues. There are concerns about which type of solar development should come first, ground mounted, which tends to be a bit cheaper to develop, or rooftop solar. And all of these questions, how the law will dictate the development here, is really going to drive how the power market system works over the next, or is to develop over the next 10 years. Furthermore, I already alluded to the importance of hydrogen, the importance of electrolysis. The Netherlands aspires to become the hydrogen hub of Europe, from a gas hub that we currently are to becoming the hydrogen hub. And this includes a target of 3 to 4 gigawatts of electrolysis. So those are those instruments where you can split water into H2 and O2, so hydrogen and oxygen, with electricity. And that is a really important source of flexible demand, but also a really significant amount of additional power that needs to be generated through different types of sources, such as renewables. The current government has announced a climate and energy fund to speed up the transition, speed up the build out of a hydrogen network, speed up the scaling up of what they call high quality renewable energy sources. But how that will roll out will have a very important role to play in the Dutch system. And then finally, a key question that is on a lot of solar developers' mind that I speak to is the role of clean flex, the inclusion of batteries into their solar assets, but also how you're going to keep the lights on in a system where 70, 80, 85% of power will be generated by intermittent sources like solar and wind, using the standard argument of the sun doesn't always shine, coming from the Netherlands, I do know that. The wind doesn't always blow, and that leaves for problems. What type of clean, flexible sources, so peaker type, will be used really has an important effect on the power markets and the prices that come with that. And we'll dive into that particular aspect in the fourth section of at the end when we talk about net zero. So, a quick recap of what we've done so far. Power prices are exceptionally high at the moment due to high commodity prices, where the Dutch system is extremely tight to especially the gas market, which is responsible for more than 40% of generation. And also the Netherlands is at crossroads. More renewables, increased flex of the system will have a very important role to play in what prices will come for your solar projects, for the baseload prices, how much revenue you can drive from that. With that, I would like to turn the floor to you and ask you a question, ask you for your input. Namely, prices are very high at the moment. Do you expect power prices to stay so high? There's the yes option. There is the they will stay high, but they will not go as low as before. There is a significant change in the system, or nope, they will absolutely go down. And that's why I'm here, to learn about how I can drive some revenue for my solar project. So if you could answer those questions, then that would be lovely. I'll give you a little more time. And then I think we can see the results, where very interestingly, people expect prices to be above, to stay above some COVID levels. Very interestingly, that is at 20%. I think it will stay as high. That's fascinating. And 10% of the pessimists that expect that prices will go down. Now, hopefully, over the next sort of, and there's 37 minutes left, I can talk a little bit about how we see this developing. And one of the key findings that we have done when, for example, looking at how the market is developing is very much in line with the 71% of the people there that expected prices to go down, but there being a little bit of an upside compared to pre-COVID levels, mostly due to, now we're getting quite technical, the different ways in which gas can be transported, Russian gas can be transported into Europe, leading to slightly higher gas prices. And as long as gas is part of the generation mix, power prices will stay up. What we see on this slide are sort of very high level, the three main ways in which revenues can be driven for a solar price, for a solar project. First, there is the subsidized asset, SDE, SDE Plus, SDE Plus Plus. The Dutch really have a very interesting way of naming their subsidy schemes. I wonder what the next one will be called. The second way is through a power purchase agreement, a corporate PPA, or a different type of PPA. And then third is just the merchant tail, the merchant projects that work on the power load. Now, it doesn't need to be one only, and there's no rule that you can only use one of these. Usually, in fact, it's a mix of all of the above. An important aspect of solar prices is basically comes down to the amount of revenue that a solar park generates tends to be below baseload prices because they generate very cheaply. Operational costs are very low. Their marginal costs are very low, meaning that when the sun is shining and all of these solar parks are generating, power prices tend to be lower. We call that the profile effect, the profile effect, or in our terms, the price that results from that, the capture price, the price that a solar park can capture in the market. And this is really the starting point of much of the business systems that are there. I will talk about the SDE Plus and SDE Plus Plus and how that functions and where the upside is and where the downside is in a second. But that cannibalization, that price cannibalization, the profile effect, we do expect to increase as more renewables join the system. There are three important factors here. One, that determine the cannibalization effect or the cannibalization level. Three important factors. One, the amount of solar that is installed, because the Netherlands is not so big, and there's, in terms of solar hours on an annual basis, there's not a very big difference between the southern part of the country and the northern part of the country. Two, how much solar and other renewables are installed in neighboring countries. For Dutch solar prices, the amount of renewables installed, the amount of solar installed in Germany has a very big effect on the power prices in the Dutch system at that moment, especially as Germany is increasing its targets with the new Greens in government there. And then third and finally, how much is the correlation between the solar, the sunny hours where solar parks can produce and other renewables such as wind can produce, because those are the low priced hours. Let's move to the SDE Plus or Plus Plus and sort of quickly explain how that works. It is what we call a sliding feed-in premium, in that it's not quite a contract for difference. It's not a set price that you have, but it is something that tops up the onrendabele top, the unprofitable margin that you need for your solar project to come online. Every year, the Dutch government determines what the maximum amount of subsidies are that a typical solar project would require. The Dutch Environmental Agency, PPL, determines this. And then there is an auction. That auction, the SDE Plus or SDE Plus Plus, allows you to bid in at that maximum level, or if you feel like I can do this for cheaper, bid your price below that. If you win the auction, congratulations, you sort of have a 15-year period in which you can receive a maximum subsidy of the price, of the difference between the price bid and the base price. The base price is the expected sort of 2/3 of the long-term expectation that the Dutch government has on how power prices will develop. Every year, however, you're not paid out that full amount, but rather the difference between the price bid and how much money you received or would have received in that market through the correction amount. The correction amount is a calculation that, when you read it, looks quite complicated, but basically comes down to the baseload price, the EPEX spot, the day ahead market, multiplied by the profile and imbalance factor. So that is the profile effect, the capture price that we talked about before, and a discount for the imbalance costs. Now there's two differences. So far, it's pretty much like a CFD, like a contract for difference, but there's two main differences. One, there's a maximum amount of subsidy that can be paid out. So there's a little bit of risk to the developers if correction amounts drop below base prices. Talk a little bit about some of the risks there in a second. And two, you get to keep the upside, which is of course extremely useful right now with power prices, as we saw before, north of 150 euros per megawatt hour, or you get to keep that and sort of use that. You won't receive the subsidies per se, but you don't have to pay anything back. The risk of the correction amount dropping below the base price is, people think about this differently. Some find this sort of a necessary thing to think about because it hasn't really happened in the past, but I just want to give you two main pointers of how we look at this. One, at the moment, with power prices where they are right now, this is an unlikely thing to happen, correction prices or correction amounts dropping below the base price. However, power prices, if commodity markets are less tight, power prices can return to normal. And then based on the profile and imbalance factor, they could drop below it, especially for older assets from the 2013, 2014 subsidy rounds that have higher base prices and where the base prices are not adjusted for inflation. Which brings me to my second point. Where inflation is involved, it makes it very, very difficult because it basically devalues the base price that you have and puts a risk on the developer or on the owner of that asset. All in all, the Dutch SDE Plus, SDE Plus scheme is considered internationally to be quite a fair compensation. It's an interesting system, but also one where you need to pay attention to the details, where especially now in the SDE++ scheme, CCS, carbon capture storage, is competing directly with your solar project, making it quite difficult sometimes to receive subsidies. We saw this last year, even though there are some details on last year's auction that we can gladly talk about another time, and that might happen this year as well, especially as the amount of solar capacity that is allowed to participate or is allowed to clear, so to say, in the upcoming auction is limited. I think that brings me to a next point of the second type of stream that we have on the PPAs, corporate PPAs, if you wish. At the moment, the market for PPAs, or how PPAs are valued, tends to happen in two main ways. First, there is the sort of index of futures prices. So you can trade futures prices and then you have that as a starting point of this is the value of the electricity over the next 5 years. You take a little bit of a discount for the profile effect, and then you have your power price. What's happening more and more, and we're very happy with that because we're one of the drivers there of this, of looking at this in this way, is a mix of futures prices and fundamental markets, for fundamental market modeling. So futures tend to be more volatile, tend to go up and down a little bit more. We saw that on the previous one of the previous slides, where we within the time span of the past 12 months, prices had gone from as low as futures prices had gone from as low as 45 euros per megawatt hour to more than 280. And especially if your PPA contract is for a longer period of time, you would want to phase in some fundamental modeling. So what then determines the value of your PPA if you look at the fundamental type of things? First, you have your base load price, you have the asset profile, the profile effect. You need to take into account the balancing costs, and that leaves you with a value of the energy that you're selling to the off-taker on the other side of the PPA. You also have the guarantee of origin, a certificate that basically shows to the rest of the world, hey, my power is green. And then you have, when it comes to the financing part of things, the cost of capital at risk, which leaves you with the fair value of a PPA contract. Relevant for all of the people here is looking at sort of if there is going to be enough of a market for the PPAs in the Netherlands. Luckily, we've done some analysis on this quite a bit actually, and what you see there is the dominance and I hope that the slide moves to the next one. The dominance in the amount of PPAs that we see supplied into the system. First of all, that is mostly on the offshore wind space, which makes sense. In the tendering mechanism that the Netherlands has, there is an incentive, the sort of guaranteed offtake through, for example, a PPA is incentivized in how the contracts for the development rights of, for example, Hollandse Kust West or Hollandse Kust Zuid last year were awarded. Also onshore wind. This is mostly driven by some larger parks and deals with, for example, Microsoft or Amazon or Facebook / Meta, however we pronounce it, last year, and the data centers that they have. The solar PPAs are more limited for two main reasons. One, there isn't a whole lot of data availability there. Solar parks tend to be a little bit smaller and have lower generations, and that leads to maybe fewer announcements on this. And second, the amount of power that they generate, the sort of width in which the PPAs are can supply power to the off-taker is more limited than, for example, onshore wind and especially offshore wind. I promised before that one of the things that we were going to look at is sort of if we see enough demand in the Dutch market for PPAs. And there the answer is quite straightforward. In the short run, until over the next 10 years, yes. Companies are greening their power sourcing. There are a lot of cheaper sources of renewable generation coming online in the Dutch system. And that should, when we look at matching demand and supply, should work. There's more uncertainty in the period post 2030. And that uncertainty comes going back to the top of the presentation with how is demand expected, and especially flexible demand, expected to develop going forward. Maybe third and finally, as the third and final revenue stream, before shortly opening up the room for questions, if you have those. There we look at the merchant tail of the project, or the merchant exposure to the project. And what I've shown there is basically what are the factors to consider there going forward. It looks similar to the PPA, except for some of the cost of capitals at risk, but it's basically the profile effect, the imbalance costs, the GOOs, etc. And what we see there, going back to the poll that we asked at the start of this section, is yes, power prices are likely to go down to, or are likely not to stay as high as they currently are, likely to decrease as commodity markets, especially gas, become less tight. But assuming some important changes in gas markets, for example, Nord Stream 2 had the pipeline between Russia and Germany, which we do not expect to come online. Gas markets are likely to be more tight, which will lead to more LNG being shipped, liquefied natural gas being shipped into Europe. So gas prices will be a little bit higher. And whenever gas sets the price, gas CCGTs set the power price, the overall price will be higher simply because their commodities that they use to generate that power will be higher. I think with that, given a short overview there, but maybe we can, if there are questions, Manuela, we can move to some of them now, and then we'll do a short excursion to a net zero world.
Yes, thank you, Felipe, for your presentation. Yeah, we have a few questions already from the audience coming in, and I think we can start with a very basic question that came from the audience, but super important to address, which is, what do you see in current PPA pricing trends? So if you look at an overall trend, what do you see there as already kind of standards or trends?
Yeah, exactly, and then thank you for that question. As I said, there's sort of, depending on the length of the contract, there's two main drivers there. First, we have the PPA level, or the PPA price, depending on the futures prices, and second, sort of fundamental value taking over. Now, this leads to the funny or the odd situation that a PPA for 1 gigawatt hour of solar PV conducted where the negotiation finished in the 1st of August 2021 is worth less than that same solar, or that same power generated, but the auction, sort of the negotiation conducted the 1st of June, so yesterday. And that difference is purely based on the futures prices. So the current PPAs that are being, what we see in the market is current PPAs being negotiations for the ones that are successful, having sort of a higher price. So a lot of developers at the moment want to put their PPAs in the market. A lot of off-takers, however, sort of want to put the negotiations on hold a little bit when more clarity is there in sort of the longer-term effects of the war and the commodity markets that are there.
All right, Felipe, thank you. I think that's clear. It's also something that most people are experiencing right now, right? Anyone that is working with PPAs, I think, could relate to what you have been saying already during the presentation on your answer. And another interesting question that came as well from the audience is how does the current high price and extreme volatility of the market is impacting actually the balancing cost for components these days? So for mainly for solar PV, if we would look at this sector.
And that's a very interesting question. So one of the things that we hear when talking to a lot of supplier, and then we're talking about sort of the cost for the components there, is that that there is a double uncertainty. One, in the cost of productions usually in China where these things where these components are produced, and then second, in the cost for shipping these units to Europe. And there the uncertainty just really drives up those prices. I must admit, I have not done any research on shipping costs. I'm not an expert on shipping costs, and I'm not an expert on sort of the costs of productions of these units either. What we hear when we talk to people, various people in the market, is sort of prices are expected to stay a little higher for the foreseeable future, especially as the demand for these components is coming up as more countries across Europe and across the world are increasing their decarbonization ambitions, and the competition for these units just becomes stronger. But the current high levels, as the technology does grow, is not expected to stay there.
All right, thank you. I think we have time for one more question, and then we can move on to the final part of the presentation, right? Which is actually a very interesting question. According to this attendee, they think it comes down to one important question, right? Would be, would constructing a solar PV plant actually be economically viable without SDE? And even with the help of a copper PPA, or actually would off-takers be ready to pay the necessary fixed PPA price that would be actually necessary to meet IRR and hurdle rates, for example?
This is
what do you think?
Yeah, this is an excellent question. I mean, I don't think my opinion matters here, but I can tell you a little bit of how we model these types of situations and what we see when we model the market there. Yes, we do expect PPA type development in the future, in the post SDE world. However, we are a little bit more conservative than maybe the Dutch government or the Dutch Environmental Agency as to when this would be allowed to happen. So how we model it is basically we allow the model to make investment decisions in and of itself. It's quite a technical story, but basically when you have guaranteed offtake, the cost of capital tends to be a little bit lower. So you see the assets coming into the Dutch market in our model, the amount of capacity that we see there above the subsidized capacity. You do see that happening in the period post 2030. So that would be sort of at the end of the 20s, you would have to make that investment decision to go forward with that. So yeah, but it is the absolute relevant question, and maybe that is a nice segue into the net zero world and the amount of solar that you would require there, because there's two main ways that when we model power markets, there's two main ways that we look at it. First, we have what we call a central scenario. So that is policy that we expect to happen. Unfortunately, in that scenario, we do not expect the Netherlands the Dutch energy system, or the European energy system for that, to fully decarbonize by 2050. We do not expect to meet these net zero targets. We do not expect to meet the close to 1.5 degrees goal of the Paris Agreement. But we have devised a scenario in which we do meet that, and that is the net zero scenario that we have there. What we see there, and just to quickly describe this, you see an incredible speed up of the build out of intermittent renewables like solar PV, going to sort of at least 50 gigawatts of installed capacity by 2050, which is a significant addition to what we see in our central market-driven scenario. But now you might be thinking, didn't we talk about price cannibalization before? And when demand is, well, average demand is at 13 gigawatts in a net zero world, that might be a little bit higher, but with 50 gigawatts of solar capacity in the market, won't my power prices completely collapse? And how will I ever be able to finance a project on a PPA system or on a just merchant tills alone? And that is an excellent question. And actually, we did a lot of research on this when last year a lot of institutional investors came to us with exactly this question. And on the next slide, I will show why we do not think that power prices in such a net zero world will collapse. Yes, your capture prices will likely be a little bit lower, but they won't be all the way down to zero. And for that, we have this graph, which I will have to explain in a little bit of detail because there's quite a few happening, quite a bit happening here. First, in the top half of the slide, you see the hourly technology share of types of generation in such a 2050 world. There's 4 main types that we see there. First, oh, that's too far. First, you saw in green, the renewables. Renewables, green, solar, onshore wind, offshore wind. In gray, you see the non-flexible thermal assets. So that is your CCGTs maybe running on hydrogen in part. In yellow, you see the flexible thermal assets. So those are peakers to make sure that the demand or that the supply of power meets the demand of power at that moment, so the lights don't switch off. And in orange, you see batteries and demand side response. In such a net zero world, that green is responsible for a lot of the generation, but not all of it. And in the way that power markets are currently designed, power prices do not necessarily have to collapse because this solar generation does not always set the price. The flexible thermal assets responsible for less than 2% of domestic generation are price setting in 34% of all of the hours of the year, meaning that yes, price volatility will go up. Yes, there will be a lot of hours where prices are close to zero, close to the marginal cost of solar and wind. But if you can produce in the hours where the thermal plants are setting the price, then you will have a significant upside. And that you see on the graph at the bottom half of this page, where you see the hourly wholesale electricity prices, a lot of hours below close to zero, then quite a significant chunk in the sort of range in 2050 between 25 euros and 100 euros, but also a lot of hours above 100 euros. And this, in a nutshell, is basically the business case of the future. How many hours, how many of these high-priced hours can you and your asset capture to make sure that you have revenues coming in through the merchant aspect of your plant, through the corporate PPAs, where you can meet your match the demand of the off-takers with your supply, and also well, I don't know if subsidies will still be around. Some assets might, unlikely to have subsidies, but yeah, that's basically why we do not see power prices crash in a system where 95% of generation comes from renewables. With that, and before turning back to Manuela to open up, maybe to see if there's some final questions, I want to sort of quickly run through what we have discussed today. First, we started with looking at the current situation in the electricity markets. For all the power market enthusiasts that are there, this will not be any surprise. Power prices at the moment are extremely high due to the commodity crunch, we like to call it, and the high commodity prices that then feed the gas required for CCGTs to generate their power in the Dutch and Northwestern European markets. Second, we had a short excursion to the business models that solar parks can have, and as more renewable projects come online, the profile effect, the price cannibalization, is expected to increase, which will lead to the amounts of revenues, the types of revenues that you can secure with your solar project. For SDE Plus assets, there is a risk that the correction amount will be below the base amount if inflation stays up to the extent that is expected to stay up for the next 5-6 years. For the younger SDE plus assets, this is less of a risk, or we expect this to be less of a risk. Second, prices for PPAs that you can get into market are really, in the way that these things are priced with linked to the futures prices, are likely to go down as markets calm down. But we do expect there to be sufficient demand for PPAs, for power purchase agreements, until 2030. And then third, capture prices, when you look at the sort of merchant revenues, are likely to go down, the profile effect is likely to increase, but there are plenty of ways to improve the business case there, either by having an asset that can produce in certain hours when prices are expected to be a little bit higher, so a different phasing kind of solar park, or by including a battery in your park to make sure that you can discharge the power generated in those hours. Finally, and we just looked at that, even in a net zero world where solar capacity, renewables capacity in the Netherlands and in Europe is expected to really go through the roof, we do not expect power prices to really crash due to what we call high marginal cost assets. And you have to think of hydrogen peakers, etc., that set the price in a disproportionate amount of hours. And that, I think, is in short, well, in 43 minutes, a snapshot of the Dutch market, where power prices are, and some trends in power prices going forward. Manuela?
Hi, Felipe. Thank you so much for your presentation. I think you shared a lot of very interesting insights, and we are also seeing this from the questions coming from the audience that keep on coming. And I wanted to start by still following a little bit on what you were discussing regarding the SDE and PPAs, because there were some more questions coming on that regard. So a few of our attendees shared that actually in 2020, for certain solar assets, the correction amount dropped below the base price. So what you were explaining, that actually happened, and due to low wholesale prices and especially high profile imbalance costs. So how do you see this evolving once actually the first project will drop out of the SDE?
Oh, that's an interesting question. So what we saw in 2020 was especially for the older assets where this base price was just much higher than for newer assets, in combination with high imbalance costs that just drove this correction amount below that. As the older assets drop out of the system, the main effect that we expect that to have is they will become sort of more responsive to market dynamics, because at the moment they only switch off when there is, or they're only really supposed to switch off when there is periods of 6 consecutive hours of negative pricing. As these systems sort of, these older assets sort of then become more sensitive to their own marginal costs, because they will not be, but they will have to, if they generate a negative priced hours, they will have to pay that energy. We sort of expect the profile effect to be less pronounced. However, with that, it is always important to know that the amount of systems that drop out of this is quite marginal compared to the amount of capacity that has been awarded in sort of the past 3 years. So the effect actually we expect to be quite small, and if there was an effect, then it would be this.
All right, very clear. I think there is a very interesting question that came also more regarding your last part on the net zero issue. And this attendee is asking you if you could explain a little bit more on why high inflation increases the risk of the correction amount dropping below the base amount for existing assets.
Yeah, I mean, the correction amount is not, or the base price is not adjusted for inflation, and it's really that. Whereas the market is experiencing inflation, so the value of money becomes less. Now, my economics professor is probably going to be mad at me for this explanation, but that's basically it. The base amount is not corrected for inflation, and that's why there's a risk, especially in a world where you're meeting. I believe the European Central Bank yesterday said inflation for this year is at 6.8% or something along those lines. If you have consecutive years of 6, 7, 8% of inflation, then that really is a risk, and is much more important than the sort of inflation levels that we've had in the period 2010 to 2020, which were between 0 and 1.5%.
All right, Felipe, and I think we would have to close it with one last question so that we are on time for the end of the webinar. You indicated that the guest speakers are still determining about 34% of the time the price in the market, right? In your predictions, did you also manage to include the current trends for lower battery prices pushing gas speakers out of the portions of the flex market?
Yeah, so here it's important to differentiate between sort of the imbalance on the role that batteries can play on an imbalance market and the wholesale market. In the way that we look at it, we include both. We see an important role for batteries in the wholesale market in a net zero world, but still limited compared to the role that they would play in the imbalance, sort of the flexibility, secondary, tertiary markets there. On the wholesale market, we do expect sort of the amounts of power generated there to come from peaking type installations, then running on hydrogen to provide sort of the low CO2 part of things, because you can't have a net zero system in which there's absolutely none of that. We did actually study on that, which you can find on the website of the Dutch Ministry of Economic Affairs. CO2 free flex, etc. And I also included a link in the presentation, which when the presentation is shared in 2 or 3 days, you can click on that and you can find it there.
Great, Felipe. Thank you so much for sharing these amazing insights for the audience in the webinar. These more questions on that topic will be also discussed during our Solarplaza Summit Netherlands. Felipe will be there. Also, his colleague Marisa Westbrook will be on stage sharing some insights on that as well in a very interesting panel discussion. And we hope to see you there. Felipe, I know we will see each other very soon in Utrecht. And for you still with us after this webinar, we have upcoming events worldwide. So we have our Solarplaza Summit France happening in 16th of June. And of course, the Solarplaza Summit, the Netherlands, happening in 21st of June in Utrecht. And of course, in Spain and Italy, we're also doing events in July. So stay tuned for our resources and our events, and we hope to see you in Utrecht very soon. Felipe, thank you very much, and good day to all of you. Bye-bye.